In this video, we're going to talk about ETFs for gold. We're also going to talk about credit card debt. And we will also touch on what I think is going to happen after the Fed cuts rates in September. Please like, share, and subscribe. I am 87 now subscribers away of recording this video from hitting my goal of 1,600 subscribers by the end of August. I think we're going to be able to do it. I think we're going to be able to pass it. Again, if you're not yet subscribed, please come join us. It is absolutely free. I'd like to thank all the ones who have subscribed already. I really appreciate every single each one of you all. Thank you again. Globally, ETFs added 4.5 tons of gold to their holdings last month, with funds in every region reporting increases. That means all around the world it's been increasing. That's why gold has done so well also. Gold has held strong. Silver went to sleep for a little bit. It looks like I could say something else, but I'll choose not to say that. If you want to call it silver took a fart, well, we can, to release some gas, we can call it that too. So that's what probably happened with the silver right now. But a combination of gold inflows and a 4% increase in the price of gold dove a 6% increase total assets under management by gold-backed funds to $246 billion would be a new month-end record. Globally, gold-backed ETFs held 3,154 tons of gold as of July 31st of this year. That is the highest level this year so far. In May was the first month for positive gold flows into the ETFs in 12 months. Since then, funds globally have recorded net increases for 3 months straight. That shows that in the gold price too. Even though as ETFs globally increases metal holdings, North America ETFs reporting outflows of gold in May and June that finally reversed in July. North America funds led the way last month, adding 25.7 tons of gold during the month. People in the West have finally woken up. It shows it in gold, is not showing it in silver as of yet. And I think most people in the West here, in America, in Canada, are pretty much asleep still. But it's starting to show a rebound here. And it also goes on to say, on the year, gold holdings by North America ETFs are down 52%. Nonetheless, the total AUM of North America funds has risen by 14% year to date, driven by recent inflows of the gold price strength. What is that telling us? We are heading for some troubled times, it looks like. A cooling CPI weakness in the labor market. Federal Reserve Jerome Powell, also known as the clown, as I like to call him, note that interest rates cuts in September is on the table. Yeah, it's on the table. Are we going to see a 25% base point cut, or are we going to see a 50% base cut? Folks, this is the time to get your metals now before the interest rate cuts happen, especially silver. You guys know I'm a silver bug more than a gold bug. You know, and the shop was a little steady today for silver. I'm not seeing any really new faces yet. I mean, maybe a few of them are new, or they came in and they said they bought this before. So I don't recognize everybody, but you know, I mean, it's starting to pick up a little bit. I wouldn't say we're, you know, really jamming yet, but I think the day is coming where we're going to see the lines again outside the store, and people are starting to get a little nervous now. Let's talk about credit card debt. America runs on debt. Well, I thought if you had a Dunkin' Donuts in your area, America runs on Dunkin', but I digress on that point. Overall, the growth of consumer debt really has slowed down on credit cards. Well, yeah, people's credit cards are getting maxed out and they're not using credit cards. America's now owe $5.08 trillion in consumer debt. Holy cow. The total household debt, all in America, including student loan debt, credit card debt, and auto loans, but do not factor in mortgage debt. When you add this all up, $17.8 trillion the American people are in debt. $17.8 trillion. How are we going to pay that back, really? I don't think many people are going to be able to pay off their credit card debt. You know, they're paying just the bare minimum to get by. And that's what's happening. It's really sad what has happened, that people had to rack up their credit cards just to survive. And then what's going to happen when they can't swipe that card no more? Where they're going to go turn next? We're running into problems. We're running into big problems right now. This is going into a tailspin. And what's going to happen when they do cut rates? Let me talk about that for a minute. Now, let's say you have a house loan and you want to read this refinance. You might be able to refinancing, but a lot of these banks are not going to be able to refinance you if your house comes in more than you actually owe. No bank's going to give it to you. This happened in 2008. People tried to refinance and they found out they owe more than the house is worth, or they owe more on their vehicles and they couldn't refinance their vehicles too. You know, a lot of people have not bought new cars over the last couple of years. Some people have, yes, but a lot of people have not traded in their cars because their interest rates were too high, and people are still paying on these loans on their 2 or 3 year old cars. And what's going to happen is they're going to try to refinance it, and the banks will say, well, your car's worth this, you owe this, we can't do nothing for you. And people are going to be stuck with these high interest rates. It's happened, you know, it's happened in 2008, and this is what I'm afraid of. It's going to happen. People are going to start losing their jobs, and they're not going to be able to pay their loans, and it's going to be in a turmoil mess. Really, that's what's going to end up happening. It's going to be in a big mess. And yeah, are we heading for depression? Well, some people say we're in a depression now. And, you know, they still not call for we're in a recession. I think we're in a recession. I think we're probably leaning towards a depression here. That's my opinion. Let me know what you guys think in the comment section below. I mean, if you're looking to refinance, make sure you have no other debt. For one, you know, when these due rates do come down, and talk to your bankers and talk to your financial advisors if you're going to be able to read this refinance. Don't just listen to me, because I'm not no financial advisor. I'm not trying to tell you guys what to do or anything like that. I'm just seeing the bright picture of what I've seen what happened in 2008. And 2008 was not a pretty picture for some people, and some people didn't really affect because we didn't have all this debt on top of it. No, a lot of people didn't have all this massive credit card debt, and it's really going to come down to crunch time. So at the end of it all, if you can afford to get more silver, I don't care where you buy it from, you can afford more gold, I don't care where you buy it from, do it if you can afford to do it, and always cost average. Again, if you have any questions for me, my email will be in the description of every single video. I have helped out dozens now of you folks. I appreciate the emails. I appreciate the PayPal donations. I appreciate it all. I'm willing to help anybody at no cost. If you have a question about, is this a good price on this coin, or is this lot of coins you see on eBay, or is this company offering a good price, I will double check, make sure you are getting the best price you can get. That is my offer to you. That will always be my offer, free of charge. If you'd like to make a donation after, feel free to do that too, but there's no obligation there at all. So until the next video, Coin Shop Chris is out.